What's up, everyone? All right, so in this episode, we're gonna break down the game plan and the watch list for the week ahead. This is our last full week before Thanksgiving, all right? So we're gonna have a holiday week, the week after next. It's gonna break up trading a little bit. Typically, the Thanksgiving week can be hot on Monday, Tuesday, Wednesday, Thursday, markets closed, and then Friday, Black Friday, usually a slow day. But our Black Friday sales will be running. So I wanna make sure you guys have a chance to do my 2-week trial leading into the sale, so that way you know exactly what you're getting if you decide to become a member at Warrior Trading for the next 90 days, for our boot camp, for our intensive program, or you decide to be a member for a full year. So I will pin a link to the top of the comments and link it in the description where you can do the 2-week trial, and you can start today. I would encourage you to start today. Sign your market data agreements. That way, tomorrow morning, Monday morning, when you're logging in, boom, you're going to be able to get into the platform. You're going to be able to use the charts, use the scanner, use the news feed, and be ready to roll. All right, so let's talk about last week. Last week, hit my weekly goal, $100,000. It's been a while since I had $100,000 weekly goals, but I'm currently sitting up over $200,000 on the month of November, 2 weeks in. The goal for the month of November, 400 grand. So I'm halfway there. But you know what's kind of crazy about setting goals this high is that it could totally happen. And look, I had one day last week on Wednesday where I made $100,000. So basically, all of my profit from the week came from one day. But this is the market we're in where we're seeing these really big moves. So I don't think it's unrealistic for me to set these high goals. In the first week of November, I had a day where I was up 40,000. The next day I was up 30, and then I had a couple other decent days that week. So it wasn't like one single day, but it was just a bunch of, really decent days and some strong action. So this week coming into, like I said, the last full week before Thanksgiving, I'm not sure what to expect. Friday, we had momentum primarily on lower price stocks, which was great for some of you guys who like trading these, but for me, wasn't as easy. AREN, this one went up over 250% on Friday. It ended up peaking at about $2.40 right up here. The previous day, it was at 60 cents. So it's a huge move. Pulls back, goes higher, pulls back, pops up, pulls back, pushes higher, but then it closes about $1.63. Still decent, and it was the first stock I traded yesterday. But the problem for me is that when I trade this type of stock, let's say I'm looking at this for this breakout right here, which is one of the trades I took. It had popped up, it pulls back, it pops up higher through $1.80. I look at a trade like that and I'm thinking, all right, well, how many shares do I need to buy in order to get a really nice trade? And if the most this thing is going to move is, let's say, 30 cents, 40 cents. So, getting it at $1.80, realistically, maybe it would go to $1.95 cleanly before it hits resistance at 2. So you're talking about 15 cents a share. If you take 10,000 shares, you're only up $1,500. Not that that's nothing, but it's not really going to put much of a dent towards me having a really nice day. So then I feel like, well, I've got to take probably at least, 20,000 shares or maybe 30,000 shares or maybe even more than that, maybe 40,000 shares, maybe 50,000 shares. And then the profit starts to add up a little bit more and becomes worthwhile. But now let's remember the calculation. I use a broker in New York City. It's designed primarily for institutional traders or semi-professional traders. I say semi-professional because technically a professional trader is a trader who has their license, and that's the professional trader designation. You get your license if you work for a hedge fund or a bank or something like that. You have to have a license if you trade with someone else's money. If you trade with your own money, you don't need a license. But, if you make millions of dollars, you're essentially a non-professional, but, you obviously do it and make money. So it's kind of a funny professional, non-professional status, but nonetheless. So the broker that I use charges a routing fee and a commission, and the routing fee is 0.003. So how much is this order going to cost? It's going to cost $150 to buy and another $150 to sell. That's $300 in commissions just for that one trade. I do 10 trades like that in a day, let's just say. How much are my commissions? $3,000. Holy smokes. And so, I actually just did an interview with a member at Warrior Trading. His name is Josh. The interview will get published soon for members. You'll see it added to the profitable trader interviews that I do. But anyways, he's earned his 100K badge, and he trades with Thinkorswim. He uses Charles Schwab as his broker, and he said he really focuses primarily on lower price stocks, under $2, where he can get in, get out, get in, get out. He's commission free. There's no commission. So that same trade that would have cost me $300 costs him nothing, which means if he makes 150, he's got $150 of profit. If I make 150, I'm still red on the trade, net of fees and commissions. And this is something that's very interesting because there are so many traders like him that are using Thinkorswim to buy really large positions, and they're happy to take a penny or half a penny of profit, especially on a lower price stock. There's no commission, so it doesn't matter. They get in, they get out, they get in, they get out. And what this does, on the one hand, it creates a great opportunity for these traders. They're trading these lower price stocks, but it creates a lot of congestion because now I want you to picture this stock trading from, let's say, 85 cents a share up to 95 cents a share. That's only 10 cents. But what we know is that stocks below $1 trade down to the 1/100th of a penny. So this could be, something like this. So they trade down to this level, which means there's actually 1,000 price increments for a 10-cent move. It's 1/100th of a penny times 10 pennies is 1,000. So you've got 1,000 increments, which means you could buy 100,000 shares and jump in and jump out, and potentially on 100,000 shares. So let's see, if you took 100,000 shares and you're risking a penny per share, 100,000 shares, a penny per share is $1,000 of risk. But remember, when it's below $1 a share, you can dial your risk down to potentially the 1/100th of a penny. So now all of a sudden your risk goes from what would have been, $1,000 down to 100, down to potentially as little as 10. Now, realistically, you may not see a spread quite that tight on these stocks, but you could take 100,000 shares and you're not necessarily risking a full penny per share. And that's something that results now in people taking bigger and bigger and bigger orders. And so the order book gets thicker and thicker and thicker. It's more and more stacked up. And so now these lower price stocks, they move slower because people are fighting over a tenth of a penny, a hundredth of a penny. Now, he asked me, Ross, why didn't you kind of approach this style of trading when you got started? So one of the things I think is really appealing for Josh and for all the other traders at Thinkorswim or Robinhood or Webull with this commission-free trading is that, you can get in, you can get out, you could trade a million times. I mean, as much as you want, really, I suppose. Maybe there's some limits, but you could trade almost as much as you want each day. And it's a lot easier if you're trading something that is very thickly traded to get in and get out with a penny of profit, right? It's a lot easier to get a penny a share than $1 a share. How smart do you have to be to predict if something's going to go up or down a penny, right? I mean, not to diminish it, but it's a little bit of a lower standard. It's easier. And so a lot of traders have gotten into this game of scalping stocks that have a lot of volume for 1 or 2 cents a share. And Josh said, I'm not sure kind of how to scale my strategy up. He's made his way from the 25K badge to 50K to 100K. He's doing well, but he also feels like, how many shares realistically can I buy of some of these? If I'm only making 2 or 3 cents a share for most of the trades, 100,000 shares, maybe that's $2,000 or $3,000. Can you do it with 300,000 shares? Can you do it with 400? You kind of can't. You sort of peak out on how many shares you can buy. And so what ends up happening is a lot of these traders that are trading these lower price stocks, if you kind of, there's sort of this scale of profit of, let's see, sort of like right here, where this is your profit and this is your share size. So you'll make with 100 shares, 1,000, 10,000, 40,000, 50,000, whatever, 100,000. And then you kind of start to have this point where you actually get diminishing returns. You go to 500,000 shares, for instance, and you're actually making less than you were making when you're trading with 100 because it's harder to move in and out of the market. And so now, how do you make more money if you're trading these lower price stocks, these penny stocks, and you're just scalping pennies? Well, if you can't increase your share size, your other variable is increasing the number of trades you take each day. But a lot of the traders who are scalping are already taking 100 or 200 or 300 trades a day. That's how they're kind of adding up all that profit. So then the next variable is, can you hold longer? Or do you venture into the higher price stocks that will give you more range and start to open up, where you don't need 100,000 shares to have $10,000 of profit in a day? Realistically, if I buy a stock at $5 with 10,000 shares and it goes to 6, like that, I'm up 10 grand. So you could actually start, in a way, making more profit. You actually make, so this is what I would argue. If this is how much you make, share size on the blue line is under $2 stocks. Let's compare this to, between $2 and $10. I would say your starting point of how much you can make is going to start, and it's going to be quite a bit higher. So with 10,000 shares or 50,000 shares or whatever it is, the amount that you can make based on that share size is significantly more. Now, if you're kind of thinking about this, you're also recognizing that this is going to be higher risk because you're putting more money at work, right? Dollar size, 10,000 shares of a $5 stock is certainly more than 10,000 shares of a $2 stock. So you are putting more money on the line, but this is where I see, at least for me, bigger return. So when I got started trading, I started trading during a time where you still had to pay a commission. Most people at Thinkorswim, TD Ameritrade, were paying $10 per trade. Now you could talk your way down to $7 a trade. Some people maybe were getting as low as $6 a trade, but not a lot lower than that. $6 per trade. Okay, so if you wanted to take, let's just say, well, my daily goal, if you don't know, was $200 a day. $200 a day net profit after commissions for me. If I took 10 trades at $6 per ticket, $6 to buy, $6 to sell, I'm spending $120 on fees and commissions. My goal is $200 a day. So now I can't do this kind of hyper scalping, super active strategy of getting in and out for 1 cent a share. It's not going to work. So what do I end up focusing on? I end up focusing on stocks between 3 and 8 and maybe up to 15 and 20, where I can get in with 2,000 shares and I can pull 15, 20, 30 cents of profit out of that trade, because I knew that the first penny of profit, more or less, went to fees and commissions. So that's kind of where my strategy started. And perhaps that's a more difficult starting point than starting with pennies. I'm not really sure, because, I don't know because that's not how I didn't start with pennies. But, maybe it is more difficult. But my feeling is that I've been able to make a lot more than if I was capping myself at the $2 price range. And so Josh said, well, why don't you think more about using Thinkorswim or something like that to trade these lower price stocks? And I said, well, I could, and I've thought about it, but I sort of feel like it's a little bit of a step backwards, because I don't feel like I can make as much on those as I do if I keep focusing here. Now, granted, on a day like yesterday, if I just had a Thinkorswim account with $100,000 in it, I could have taken all the trades I took on AREN and I just would have saved myself fees and commissions. Now, it's true that my execution speed might not be quite as fast. I'm not using the sort of semi-professional tool that I'm using for my day-to-day trading, but I certainly would have paid less in commission. So there is a reasonable argument there, but I do still feel like it's a little bit of a step backwards for me, because where I really seem to make the most money is on these slightly higher price range stocks between 3 and 12-ish. And going down to the pennies feels to me like a little bit of a step backwards, unless I made the decision that I'm going to try to, buy 200,000 or 500,000 shares of these and, excuse me, hold them for, 50 cents or $1 a share, which is basically like buying it and walking away. And that's not how I trade. That's not how I think about things. So anyways, yesterday, long story short, was not a super hot day for me. Yes, I was up 4,600 gross profit. Fees and commissions were higher. So not a super exciting day. All right, so that was kind of the reality. AREN, SPPL, these were stocks that were moving yesterday. What else did we have? It doesn't really matter, but we had a number of other penny stocks that were moving. So that was kind of where the attention and focus was yesterday. Now, BTCT, I see that popped up a little bit after hours. This one, this is the one that I did really well on. It was my best trade of the week. It's actually my second highest profit stock of the entire year now, which is impressive. But on this one, it peaked up in these areas, got a little expensive, up around $28 a share, almost 30 or right around there. And then it started to pull back. I think in order for us to get another leg higher on BTCT, something needs to happen. And that something is Bitcoin would need to break through like $100,000. So I don't I don't love trading derivatives where I have to look at the Bitcoin chart in order to know if this stock is going to go up. But, that's kind of the reality with this stock, and I'm trying not to form too much of a bias. So at this point, it's holding up relatively well, which is great. But the catalyst that's going to, I think, send it to the next level is going to be tied back to Bitcoin. Now, I'll pull up my Thinkorswim account here. So I do have a Thinkorswim account, of course, but I don't have a lot of money in it. So this is the Thinkorswim account I did my small account challenge in. And so let's see. So we're going to do charts. We're going to go to charts. And if you do /BTC, you can pull up the price of Bitcoin. So 94,000 approximately is the all-time high on Bitcoin. And, like I said, if had Bitcoin squeezed, yesterday or I don't know, the day before, through the high, I think BTCT would have gone as well on sympathy, but it didn't. So we'll see what Bitcoin price looks like over the next 24 hours or whatever. But BTCS, this is the other one that has been tied in with Bitcoin. Although this one I actually lost money on. I didn't find this one to be easy to trade. It was, I don't know, just something funny about it. So I'm going to put those on side chart, BTCT and BTCS, although BTCT is the one I've done better on. So those are on side chart for Monday, possible continuation, depending entirely pretty much on the price of Bitcoin. Lower price stocks, which were hot on Friday, not my cup of tea, not what I love. So I kind of hope that that's not the focus on Monday, just because I know that they're going to be more thickly traded. I'd have to take big share size to make even a little bit of money, and then fees and commissions are going to be a bigger factor. So it's not where I really find my edge or do particularly well. And so I'm hopeful that that is not going to be in focus, but it may be. What I thought was good about Friday was that, at one point we had, I think, 3 stocks up over 100%, and we did have some good action. We did have some good gainers. Even though I might not love the price range, it was good to see that momentum. PULM, interesting one, had this sort of parabolic move on Thursday where it goes from $3.50 to $8, gives it all back, and then bounces up on Friday. Kind of reminds me of AGFY. This stock similarly kind of made this grinding higher and then big reversal, high volume red candles. It's really hard when they grind up on light volume because you just feel like you can't really break the ice. Like, where do I get in this? It just doesn't really work. Now, I will also note that my red day on Thursday and then Friday being a slow day did coincide with the market pulling back a little bit. So a little bit of a softening in the overall market on Thursday and Friday. Now I was green on Friday, even though the market was down a bit more on Friday. But that's also something maybe to be aware of going into Monday. So I would say right now, the futures are down a little bit more at the moment, but they're going to be obviously they move around a lot. So I got to be a little careful on the S&P because you want to make sure you're drawing trend lines where other people are drawing them. They have to be really obvious, otherwise it doesn't really work. Probably people would draw something in that area. So we may see some ascending support here. We do still have room down to the 200 EMA. So that's, that's something to be mindful of. We did have biotech stocks were down quite a bit. On Friday, we had the news of RFK, his, I don't remember what it's called exactly, but anyways, that hurt some pharmaceutical companies. So we can look at PFE, Pfizer. Let's see, Pfizer dropped quite a bit. These vaccine manufacturers, Merck, MERK, well, sold off a bit, but bounced back up. Let's see, mRNA, Moderna. Their stock has come down so much. It's crazy. It was all the way up at 400 at one point. That was in August of 2021. That was the peak. Wild. Well, yeah. So I don't know. The only problem there is that we often like trading biotech stocks. So, that's something to be thinking about a little bit. I'm not sure what this is going to mean for some of the small cap biotech stocks that do like vaccines, GovX, VRAX. I don't know. Right now, they're not really responding, but it may put a damper potentially on their business. So could be some risk factors there. So things with the Trump presidency, as we kind of knew, there'd be a little bit of kind of buying into the rumor and then potentially selling the news as certain things kind of unfold. The tariffs are a big question that we don't know what that's going to look like and what it's going to mean for the individual companies, if there's going to be carve outs. What about Tesla? What about Elon Musk? What carve out is he going to get? He doesn't want to have a huge tariff on everything that comes from China. It's going to hurt his bottom line. So is he going to get a carve out, some exemption? Maybe, I don't know. Well, because there's a lot of unknowns. So, just have to sort of, when info comes out, the market will react. And that's what happened with RFK getting that role. So that's something to be a little bit aware of. IWM, this pulling back with the overall market, not surprising. So we've kind of, retraced this initial big spike, come back down here, back to this level. We'd want to see it base out there and hold that level. That would be kind of ideal. So a break and then a retest. The break was on high volume. The retest right now is on lighter volume. So the technicals support this potentially holding, but time will tell, and the variables of the market are certainly are going to drive that. So, we've got some stuff going on in the overall market to be aware of. Tesla, really nice initial move all the way up to 360, has come back down here to 320, starting to base out. So could be interesting to watch this to see if it, makes a move back up to 360. I mean, I think long-term Tesla, especially with Elon Musk's relationship with Trump, is positioned pretty well. I did see a possibility about SpaceX IPO. They were saying $135 a share potentially. Elon Musk SpaceX preparing to launch a tender offer in December to sell existing shares at $135 a share. So that values the company at $255 billion, which is larger than certainly their previous valuation, but it's quite impressive. So that's something that's, again, maybe coming into the market, and that could juice things up a little bit as traders get excited for a SpaceX. My camera died out. I think it's overheating. A SpaceX IPO. So we've got some things that are kind of coming up that'll be really interesting to see, where that kind of leaves us. And in the meantime, every day when I show up, I'm just looking for stocks that are moving. I like to find stocks that have breaking news. I like to ride that momentum, and I'm hopeful that we will see continued strong trading. I mean, the last 8 weeks or so has been really phenomenal. So right now, I think if I pull up my metrics, let's see. I didn't import my trades from yesterday yet, or from Friday, but that's okay. So we'll go to reports. So I got Wednesday and Thursday are imported. So those, you could see both of those. Those are in. But we'll go to 90 days here. So, we'll close this out. So sitting 90-day profit right now. Back to 90 days. $1,051,000. Wow. A couple of big green days. I mean, it moves the needle in such a big way. So, it's $1 million in the last 90 days. And let's look at my year to date for a second. So year to date, I'm sitting at, 1.4 million, which means I've made 70% of my profit, 60% of my profit just in the last 90 days for the whole year. So, wow, things are picking up. Profit loss ratio, average winner 726, average loser 540. Good profit loss ratio. The $24,000 loss on Thursday hurt. That brings down my average, it increases my average losers and hurts my metrics for the whole year. But, it is what it is. So, anyways, accuracy about just under 65% this year. Average daily profit 6,691. So right now, my average daily gain for the last 30 days, however, is probably closer to $20,000. So that also made it a little easier to stomach the loss from Thursday because I knew, realistically, I got a couple more green days, where I'm having solid green days, $20,000-$30,000. That loss is gone just like that. So right now, I got to keep my head down. I got to stay focused, make sure I understand the profile each day of the type of stocks that are making the biggest moves, and jump on the waves of momentum as quickly as I can. So, what we know about trading is, of course, nothing goes straight up. Everything goes in these sort of waves. Some of them go faster than others. So I'm watching these pullbacks right here on something that's strong, on a stock that meets all 5 pillars of stock selection, and then I look to ride that next leg up. So I add, take profit, take profit, add, take profit, take profit, add, take profit. So I'm trading this whole area here until we get sort of the first step down where we come up and then we go lower versus this pullback. So if you want to learn more about the strategy I'm trading every single day, I'd encourage you to do a 2-week trial here at Warrior Trading where you can actually watch over my shoulder for the next 2 weeks. So I'll put a link in the description where you can check out the page that has the 2-week trial. There's also a link there to do a 90-minute free day trading course, which I think you guys would also enjoy. So reminder, as always, trading is risky. My results aren't typical, so manage your risk, take it slow, and I will see you guys live streaming Monday morning, 7 a.m. All right, I'll see you guys then.